Hello, Maverick traders, and welcome out. This is Ankit from Maverick Currencies here, and this is a currency room for the upcoming week of January 29th till February 3rd. Let's break down this week price action and talk about our upcoming week ahead. So this week was a very quiet week. If you take a look at the volatility, we did get some action in the equity markets. We did have a breakout above the 20-day moving average. So that was a bit of a nice confirmation, because so far markets were struggling about that area. Again, we have seen this downward trend line for the longest time, and we actually have a breakout now. So we're getting a bit of a confirmation there. Outside of the equity markets, everything else was a bit more on the downside. We didn't see much in the crypto market, and cryptos were is still in the consolidation phase. The gold market remains strong, but it was very a small percentage weak. Oil market did pull back, so overall that was a bit of a bigger mover. And then we had the 10-year yields stacked slightly higher. So outside of the equity markets, it was just a very quiet week. And we'll take a look into the charts, and we'll look in the volatility section here. But outside of these the economic events, we didn't really get a huge lift from Bank of Canada. Again, Bank of Canada did raise rates by 25 basis points, but as it was expected, they talked about pausing further rate hikes, but at the same time, they said they're not looking to cut rates. I think that's where all the central banks are right now. They are at the peak of their rate hike cycle, so they will be pausing, and I would expect a similar scenario from all the other major central banks. The big fireworks or big movement was from Australia this week. The Australia CPI much hotter than expected. I mean, look at the number, CPI quarterly number 1.9 versus 1.6, and again we have the yearly number at 8.4 versus 7.6. So this kind of fueled the expectation that the RBA will have to continue raising rates to combat this inflation. So that's why we have seen a nice lift from the Australian dollar, and at the same time we had a nice little upside move in the equity. So the risk sentiment was positive. We got a nice move from the catalyst from Australia. So overall, that was the best currency this week. If you take a look at the other hand, the New Zealand, I mean, we didn't have that kind of similar effect out of the New Zealand. The expectation for the CPI was of 1.3, and it came at 1.4. So again, this really puts down the expectation. Again, RBNZ has been one of the most hawkish central bank, and so far with this little slightly less than what we've seen from the Australia, this really dampens some further outlook for RBNZ to raise rates. So we didn't really see a big fireworks out of the New Zealand. Overall, the Kiwis remains a bit more on the sideways, but Australia, I mean, that was really where the big movement was. Outside of that, we didn't really see much movement out of the US GDP number. Came in a little bit more stronger than expected. And again, today we had the core PCE price index, which again came in line with expectation as well. So outside of the Australia, really didn't see much activity anywhere else. So let's take a look at last week's review, take a look at percentage gains, and talk about where the big movement was. So as we take a look at the overall market return, again, that's where we have the biggest return is in the equity markets. S&P up 2.62% up. World Stock Index up 2.08. Crypto was mildly up at 1.38, and again, gold is 0.22. So the oil is really the only negative one for the week at down 2.71%, which kind of erased the gains from last week. So let's take a look at the equity markets. So this is where the chart looks interesting, because we have been in this long downward trend since last year, since 2022. We've been in the downtrend here, and we are actually now pushing higher. So this again falls into the premise that we have for the equities, to where we are in this ABC correction, where we probably likely to kind of hit this level before we turn lower. So I mean, we're still on a bear market, but for the short term, there's excitement. There is that FOMO, everybody trying to jump in because, things are breaking out. We expect this to kind of go higher up to this 410 to 420 area before it finds a bit of a pause. So everything is still in line with expectation. We expect markets to make a little bit push before turning lower. On the other hand, we did notice that the volatility hit a 52-week low. I mean, if we take a look at the standard VIX, which we use to gauge the equity markets volatility, that's down to 52-week low. So we are in a low volatility environment and pushing higher. So this is again a good environment to be in a little longer term trades, but nothing as fireworks are we getting in the short term basis. That's when you have higher volatility. If you look back in 2022, we hit this low volatility period, but take a look at back in May, September till October, this is where the volatility was. So we are in this constant declining volatility for the past, for the past month and a half. So overall, not expecting much till next week. So if we take a look at the movements in the currency market and the crypto, let's take a quick look at cryptos here. So you can see that cryptos, Ethereum was really the only down performer. Outside of that, the Bitcoin was up. We had the Bitcoin Cash was up. So overall, it remains in that uptrend. We are seeing much better price action from cryptos that we have seen in the past year, in the past few months. So overall, I think still remains bullish. Now let's take a look at the currency market, and this is where, if you look at the percentage move, it kind of puts you to sleep, because usually we like any movements above 1% is a good trading week. The Australian dollar, I mean, that was the only currency, if you were long Australian dollar, regardless of what pairing you were in, you did well. If you look at Aussie against the Kiwi, had a very nice move, and anything else, Aussie yen, Aussie dollar, Aussie Swiss franc, everything else did well. So, I mean, right now, outside of that, it was just a quiet week. Percentage-wise, again, yen was down, dollar was down. But notice one of the things, I know dollar has been a very crowded trade onto the downside. Take a look at Swiss franc. Swiss franc was actually the weakest currency after the yen. So that's one of the currencies I'll be taking a look at into the charts later on. But that's something we need to pay attention to. Outside of that, the little positive price action was in the CAD. Remember, CAD has been one of the underperformers. So the fact that CAD did reverse some losses towards the end of the week, it actually gives a little positive sign going into next week. So we'll talk this in detail when we take a look at the charts. Let's do a quick market analysis and see where things are sitting at across the board. So our outlook remains at +2. I think markets are above the 20 to 50-day moving average. The momentum is up. So there's no doubt that market likely to crawl higher. Remember, it's a low volatility environment, so maybe it's just moving at a very slower pace versus when you have volatility, when things are moving at a much faster pace. Outside of that, if we take a look at the world stock index, I mean, the world markets looks definitely more bullish compared to the US. You can see that we have broken that above this downtrend for the longest time in the past. I mean, since this year, starting this year, we have been on this upward trend. So overall, everything kind of looks bullish across the board. And lastly, if you take a look at the crypto markets, I mean, we are just consolidating here. So, when we get this a burst of energy, I mean, the whole month of January has been pretty positive for the cryptos. So after a big run, it's consolidating. So not really wanting to go long unless we really break out above that. Consolidation phases can last for much longer. I mean, if you take a look at last year, I mean, we got many runs in between and we went to the consolidation and it just didn't really go anywhere. So just always keep that in mind. We need that confirmation to the upside in order to continue being on the long side. Now let's take a look at the schedule, because this is where things get exciting. I mean, I always talk about always look ahead. This week was not a busy week, but next week I'm very excited for. We have 3 central banks. We have employment report from US and New Zealand. We have GDP numbers. I mean, this is a very busy week. So you want to make sure you are you're active throughout this week, because I think we have some good catalysts across, especially after this quiet week where volatility was very low. I think next week is a good week where we get this catalyst to break out of those ranges. So starting with the Canadian GDP, we have the Kiwi employment report. The most important one is really the US. Again, the FOMC rate statement. They're expecting to raise rates by 25 basis points, but again, the big focus is really their outlook. if right now we are just battling between the Fed and what the market is expecting, the Fed is not as pessimist about the, cutting rates. They're still raising rates or holding rates. But if you look at the markets for Fed fund futures, they're expecting rate cuts in the next half of this year. So we definitely are seeing two opposite sides, and they're just fighting with each other. And that's why we are just having this kind of an opposite outlook, a bit of a confusing outlook in the markets, and one is getting ahead of each other. So we have to kind of wait and see what happens next week to give us that confirmation. We have the ECB rate statement and the Bank of England, and right now you can see that the Bank of England is looking to raise rates by 50 basis points, and we are looking at a 50 basis point rate hike from ECB as well. So far, we are not really seeing any excitement in the price action, but something we have to look at for next week. And lastly, we got the U.S. employment report, something to keep a close eye on, because as we are hearing about the companies laying off across the board, we have to kind of see if the unemployment rate ticks higher, and how would that impact the markets, and how would that impact the US dollar. So a lot of the moving parts to pay attention to, which will start to make a lot more sense and give us those confirmation that we need in the markets. So the equity market is likely to move to the upside. I think that's the premise until Wednesday. And after Wednesday, I think you really need to look at that risk with the FOMC. We can either blast higher after that, or we can actually reverse after that. It could go either way. So next week would be a week where you want to be just cautious for the FOMC. So the three central banks, this is the schedule here, Wednesday and 2 on Thursday. And outside of that, the economic reports that we just discussed. So all of these are good schedule events to look for trading opportunity. So let's do a quick currency analysis and see how things are moving, what the charts are telling us. Again, we all have our outlook, we have our biases. Let's see what the charts are telling us. Let's start with the crypto markets. Everything is, like I said, trend score are a +2, but velocity is just 0. This is where, you're not really getting a big move one way or the other. So we're getting consolidation, and that's really it. And if you take a look at Bitcoin Cash, they're all kind of doing the same thing. Ethereum, Litecoin, they all are in this basing format. So you got to be patient when you see these basing format. And if you're looking for a breakout, you need to get that high base breakout. Right now, these are all making high bases. So good setups come from this high base breakout, but we need a confirmation for that. And really not to jump too early on this trade ahead of this breakout. Now let's take a look at currency market outlook, and this is where we rarely get these weeks where just not much happening with the velocity. I mean, you can see most of the velocity on these currencies are sitting at a 0. So the US dollar remains at -3 again. Every rally is, look at the wicks that we're getting here. Very small candles. So not only we are kind of staying in this range, but we are actually getting very small percentage moves. I mean, if you look at the candlesticks, we're getting 1-2% moves in this area. I mean, until right here, we were getting good moves. In the first week of even January, we got nice good moves. But after that, you can see that very small ranges. So we can't really be ultra short on the dollar. I think things have kind of slowed down. So something to keep an eye on. It's not going higher, but it's not really going lower either. So we need that catalyst to get out of this little funk that we are in. Now take a look at the Japanese yen. And again, Japanese yen has been a very difficult one to really call, because if you look at the range here, this is a very wide range, and at this point we are bouncing back and forth and not really moving. So we got some good movements in the last few weeks, but then this week was just very quiet. Again, velocity remains very much on the sideways, so nothing to be excited for within the yen. Now, the Swiss franc is the one currency that I actually think the next big move is likely to be in. Remember, other than the dollar, Swiss franc was one of the best currencies of 2022. And again, that was really running off the back of the downward markets and the risk-off trade. If the market continues to push to the upside, I think this is where it stands for a bit of a correction. So I like the fact that it's moving lower, but again, one thing I'm not excited for is the velocity. So we'll take a look at a lot of the Swiss franc crosses here, but this is something I'm paying close attention to for a continued move to the downside. And even looking at the euro basket, you can see that it's slowly kind of losing its momentum here. We have the ECB rate statement this week. We'll see if we can provide some catalyst. But if you look at the momentum was a little bit more on the downside. So the euro kind of goes on a sideways to a bit lower on the watch list here. British pound, again, another currency that looks very uninteresting. Again, we are just sideways for the last, if you take a look at this, the last few months, we just sideways, not going anywhere. Same thing, we'll take a look at the Bank of England rate statement and see if we can find a catalyst. So far, no velocity whatsoever. So the only place we saw some velocity was the Canadian dollar. As you can see, that Canadian dollar is, again, another currency that got hammered in the last 2-3 months. And right now, it's in this very similar boat as the dollar, but it's catching a little bit more action here in the past couple of days. So it's not really breaking lower, and it could be just trading within this range. It's if it gets above this 20-day moving average, then we'll aim for the 50-day moving average. So very mildly bullish here. Again, we were at -2. It's sitting at -1. So I think you got to be careful about shorting the Canadian dollar. I think in the shorter term, it does have some chance to rally if we start to see a more of that continued movement that we've seen this week. Now, the Australian dollar is the big breakout today this week. We were sitting at really not in an on-trend here, but now we actually broken above the 200 moving average, broken above that downward trend line. So things are looking good here for the Aussie. Momentum, again, right now, velocity is pretty quiet, but this is, again, could be consolidating before it finds its big move one way or the other. So overall, the Aussie looks much better compared to the Kiwi, which, again, was one of the best currency in the past 3 months. And you can see the entire month of January, it has really gone nowhere. So the trend score has gone 0 and the velocity has gone 0. Remember, when we looked at December, we had the Australian dollar was kind of doing the same thing, and the Kiwi was on fire. So always use your trend score and velocity scores to gauge, and then look for those trades accordingly. So as far as the trend goes, again, right now cryptos are all sitting at +2, and now we have made the Australian dollar at a +2 as well. As far as the other currency goes, dollar remains unchanged, Swiss franc, and the Canadian at -1. But remember, even though they're sitting at this trend scores, the velocity is not really there. And if you take a look at velocity this week, we rarely get these weeks where most of the board is right in the middle here. So the only thing that we have is the euro and the Swiss franc, and we had the Canadian dollar on the plus side, but everything else kind of staying very quiet. So I always say don't trade a dull market, and this was exactly the week where being in cash was the right trade. Again, that's being in cash is also a position. So let's talk about possible trades ahead and talk about our next week here and see what setups we can find. I'm actually going to talk about Swiss franc because Swiss franc, as I said, it's trying to break lower. Again, I would need to see on a currency basket to kind of give up this support area. But again, if you take a look at some of the Swiss franc crosses, like Aussie Swiss franc. Oops, let's try that again. So if you look at Aussie Swiss franc, we actually have seen a nice breakout. We had a resistance level right over here, and we've broken out. So I think in the grand scheme of things, there's definitely more room that we can see for this to run higher. And if the dollar is kind of not really moving much, we need to find out what's the next currency that's going to move. Again, next week could be different because, again, most of our focus is going to be around these events. But these are the ones that I do like here. Again, look at CAD Swiss franc. This is another one that I do like, I think, if it breaks out to the upside. Even if we take a look at dollar Swiss franc, remember dollar Swiss franc was very negatively correlated, but in the past few days, you can see that things have kind of slowed down here. which means that I'm not only looking at dollar short, I think we need to start looking at elsewhere for that short position. So let's take a look at I do like those currencies. Let's talk about Canadian dollar. We can also take a look at euro against the CAD, especially if it breaks lower. Again, right now we just kind of moving in this little small range here. But if this we get a little catalyst to break on either side, I do like if we get euro a bit more to the downside on a break against the CAD. I think we can also take a look at euro against the Aussie, which again now breaking at the support area. This is an important area because we spent a lot of time kind of staying above this area, and we had spent a lot of time below this area. So I think if it falls below that, we can easily head towards onto the downside. Let's talk about another trade, Aussie Kiwi. So look at the movement here. We were in this massive little movement from October till December. I mean, we went from almost 113, 115 down to 104. So if you look at the percentage move, I mean, that was a massive 9% move. So we have seen a nice recovery here. Overall, you can see it was a pullback and then we kind of got back into the resistance here. So at this point, I think if the Aussie continues to move higher against the Kiwi, then we know the Aussie crosses, we want to look for the upside, and for the Kiwi cross, we want to look at the downside. But if you take a look at across the board right now, I mean, look at Kiwi CAD after a massive run, this thing has gone sideways. So again, it's not really giving us a big advantage to be long the Kiwi here. The last few days, Kiwi and CAD did the exact same thing. If we take a look at Australian dollar against the CAD, again, that's where the movement was. So that's why Aussie was the biggest mover. But again, if next week we'll have to kind of see what happened with the markets, what happened with the risk trends. But right now, I do like Kiwi more short than comparing to the Aussie here. So again, keep a close eye on Aussie Kiwi. So far, if you take a look at the 4-hour chart time frame, we are just stagnating. We're just making a little high base here. So whenever you get this price action where you get a big move and consolidation, this is just a high base pattern here. But one of the other things I do want everyone to take a look at is the volatility. So if you take a look at any currency basket and kind of take a look at what the volatility is doing, let's actually change our template here. So for volatility, we will use ATR to measure volatility. And let's use a 10-day period, which is really 2 trading weeks. See how the volatility is on a daily chart. We are in a falling volatility environment. You can see that things are just not moving much. Canadian dollar, it doesn't matter which currency you look at, you'll notice that the volatility is just falling across the board. So whenever volatility is falling, which means that you got to be really mindful when you are picking your time frames. And we just did a class on this, how to pick your trading time frame. But usually you want to be on a higher time frame on lower volatility environment. And right now, as you can see, we are slowly moving lower. We are below these moving averages. So next week, let's say if we get any sort of breakout, I think that's what we would need, a catalyst, either a big push down or even a push up. Right now, we're just kind of stuck in this range here. So I think next week, whenever I take a look at these trading weeks, I always try to kind of go a bit more neutral. If I have a strong bias on something, that's a different story. But right now, don't really have a strong bias on any of these currencies. I think the markets are still in this fragile moment, and we're not really seeing the same enthusiasm in currency market as we are seeing in the equity market. So patience is the name of the game. Again, equities likely to extend gains next week, but FOMC is a risk ahead. Focus on volatility and currency in play. When you're not really getting good volatility or you're not really seeing a lot of movement, that's again a good time to stay in cash. Remember, cash is a position. Cryptos are consolidating, so I would expect a little bit more consolidation before we can break out one way or the other. As always, follow relative center weakness. And next week, again, we are closing out the month on Tuesday, and we'll be starting out February. So the schedule will change, so make sure you go ahead and register for the class. We'll be meeting a lot next week. I think we're meeting on a Friday. We'll be meeting on a Wednesday for the midweek and the FOMC. So a lot to discuss next week. So stay active or look for an opportunity next week. And we'll keep everyone posted with our updates and these classes. Thanks, everyone. Have a great weekend ahead and see you next week. Cheers.